Good morning, everybody. Just give me a moment and I will get everything going. Just go ahead and make sure the stream's all shared and whatnot. Good morning, everybody. Give me one moment. Need to finish sharing this all. Not muted, just need a second, everybody, before we really get started. Okay, all right, let's go over everything. Good morning, everybody. Thanks for joining. Okay, so we've had a little bit of bullish news this morning with the whole Iran war. Um, Sorry, I'm a little tired, so I do apologize if I sound that way. We have a little bit of reprieve in the conflict. Anyway, um, the USA is going to apparently sign some form of waiver. I didn't read the whole thing. But basically, it should be easing some of the tensions going on in the war. Um, Taking a very solid first step to actually improving things. So the market is seeing a little bit of rallying from that. However, I don't think that it will last very long. And some of the reasons why happen to do with this very large inverse cup we have right here. And also just the daily levels. But with this inverse cup, we do expect always at the bottom bullish structure. Just like at the top of a cup, we expect bearish structure. Now there is a little bit of a cup formed here, okay, which this can be a bullish cup. However, again, we are expecting some bullishness from this cup and or this inverse cup and handle. At the top of this cup here, we are looking for bearish structure. Okay, so very, very likely, seeing how we're only, 10 minutes away from market open, very likely we're going to be seeing a pretty quality short position today. Now, what can transpire from this is, again, this is 30-minute time frame, so it will be a little different than the 5-minute time frame, obviously, is we pull down and start forming liquidity back upward. Now, I don't think that'll be so much the case because based on the daily levels, again, we haven't tested the 20 MA in, I believe it's like 31 plus sessions now. Someone can count that if they would like, but um, we're very much due for a 20 MA test. Okay. Now, the 20 MA still needs to be pulling upward towards us, which it will be, as long as the price is at that level or is above that level, then the 20 MA will continue to pull up each and every session. Um, that's just something we have to be aware of, is that from a timer standpoint, that 20 MA is really starting to scream at us to say, hey, we needed to retest that level. With that, we have very bearish structure at the top of that level. Okay. That's also telling us that potentially, hey, we need to go down and retest this level. We also have this very strong double top here. Now, if we do have the bullish breakout, okay, because I know some of us are in put positions basically from the almost to the top. Um, what we would be anticipating here is first this inverse cup breaking. So seeing this smaller cup could be also a inverse head and shoulders, form this right shoulder, head upward. But regardless, at the top, if we do head upward and break this inverse cup, we still won't be exiting the puts yet. And again, besides the 20 mo needing to be retested, is that again at the top of a cup, we always look for bearish structure. So we would be looking for basically an additional short there regardless. Um, so it doesn't make sense to exit short positions, whether we're bullish or bearish right now. Because we would be shorting the top of that regardless. So if there's room for calls, we will take calls to write some of that premium to the upside. Let me look at the SPY, because I know many are looking at that head and shoulders, which is something I'm also looking at. Okay. It is something that's already been forming very well. Now, I do want to turn off some of my drawings here. Hold on. We're going to hide this inverse cup, and I want to hide that bit of liquidity. Now, even on the hourly, we're starting to get ready to push into this upper Bollinger potentially. Okay. Um, which again would give us the short position to the downside. And this cup on SPY has significant room upward still. So if we're going to create this bullish cup, um, we still would have to head upward, basically almost to the the 743.50, give or take. So we still have plenty of downside before anything starts becoming invalidated in terms of our bearish structure. Now, we did have TLT moving up a little bit this morning, and out of anything, this was going to be the signal for me that would tell me if the market's really going to be bullish or not. Um, but all the weight from TLT has been pretty much lost already. Now, when the market opens, we will look at the HIG because yes, we do see a little bit of buying in the pre-market, but that doesn't mean a whole lot. Um, Usually it's not a whole lot of shares traded in the open or in the pre-market. The volume right now is only at 9,000. So this will pick up drastically once market opens, and that's going to be a far better indication of what's really going on. And as always, same with the VVIX. If we see that pulling downward, that'll be telling us that, we will be seeing some upside buying today. Now we have 6 minutes until the market open. So we will start working on looking at what positions we might want to take today. So I want to turn off some of the structure here, just so that it is very, very clear what is happening. All right, so we're gonna hide that invalidation because that, again, we still have a ton of room before we invalidate that um, larger inverse head and shoulder or that larger inverse cup. So what we're looking for, you're currently on semiconductors, is that We're looking for bearish structure, okay? Because we do have this formed cup, and let me just put small horizontal ray going through this. But essentially, there's the cup top. What we're looking for here is bearish structure. Now, on the 5-minute time frame, this bearish structure might only take us down to the 515. Um, again, we do have to look at that 20 watt as a potential exit, but we're not getting a short position entry just yet. Again, we need to see the push above the upper Bollinger here. So if we push upward, uh, greatly in the open, then that's going to create a short position entry. Same with the SPY here. Um, Again, SPY has not validated the bearish structure yet. So that's something we're going to be watching extremely, extremely closely today. And if that is the case, then potentially we're looking at a smaller head and shoulders. But again, we want to wait for this to push into the upper Bollinger if we're going to be taking that short position. Now, QQQ very likely showing much of the same. We've not filled that cup out yet. So if the market's going to be bullish, okay, then they're going to try to fill some of these cup tops out. And from those cup tops, we will have short positions to the downside. So if it's going to push, just let it push. Don't worry about it too much right now. But so far, no short entry yet, no call entry. Nothing has really opened up. Again, we're looking for the actual price to push above the upper Bollinger on the 5-minute time frame. So the puts that I have currently are for June 5th, just across the board from my Success calls, TQQ puts, my SPY puts. Everything is for basically June 5th. Now the puts that I'll be grabbing today, um, these will be 0 DTEs unless we see some, extremely good bearish structure that we can slowly start tacking on some more dated positions into. But we'll go over that. Um, but in the current moment, we're just waiting for the upside push so that we can have the short position to the downside. Okay, we don't want to enter early, um, especially on a weird day like today where the market could potentially get extremely, extremely bullish, or this could all be a trap to the downside. Um, we're just going to be very patient on our positions and we will get an entry. They're the 9 calls, and I believe for June 5th, hold on. So I have some for May 29th for the success calls, and they are the 9 strike, so I'm not really worried about that. Even with success pushing down right now, um, again, I'm not worried about that at all. We bought these calls when the market was pretty much pushed to the all-time high. So currently we're just going to be looking for a short entry. Now I do want to look at the HIG and everything else because that will be very important to see. So HIG has not completed the up from this morning. So far a little too early to tell on HIG whether we're seeing major buying or selling yet. Let's check liquid. Liquid seeing a little bit of buying. Now let's take a look at SPY. So again, we're just being very patient for our short position here. While there's room to the downside, again, I only take my puts above the upper Bollinger on the 5-minute time frame, and I only take the calls on the lower Bollinger of the 5-minute time frame, even if we do have room to the downside here. BVIX has pulled upwards slightly. I think this price will change in a little bit, but very likely we will be seeing this pulling upward throughout the day if we are going to be seeing the selling action that I'm expecting. We do have a head and shoulders on the 1-minute time frame, which I don't really care about the 1-minute time frame too much, but that is telling us that potentially at the top of this cup here, we are getting some of that bearish structure. So we'll see if this takes us all the way to the lower Bollinger to give us a call entry, or if they'll pop it back up and give us a short entry. But we need to be just extremely patient. And I'll type out whatever I get this morning. So good morning. Yeah, so I actually do have silver calls going. Um Currently I have those 100 calls for September 30th. Uh Not too many of them. I have 4 of them currently. They're up almost 5%, so I'm a little happy about that, but overall I am bearish or bullish on precious metals. I've been telling pretty much everybody to buy the dip, enter into GDXY, GDXW, um, get leaps on everything because precious metals from my trend lines and everything, I'm expecting them to pull back up all the way to the all-time highs. Getting a little bit of bearish price action here, but we're going to be patient. Doesn't matter if we have to wait for the entire selling to the downside. It's better to have a good entry than to just enter willy-nilly and get caught. Um, because with this price being basically, hold on, oh, that was the alert. Apologize. With this price pulling down the 20 mod, that means that it can go down all the way to the lower Bollinger, or it can pop back up again. Um, so we're going to be very patient. Just allow the market to absorb some of this news that's going on with the conflict. But ideally, they will give us room for the short positions today. What strike do you have on your silver calls? There's a few other symbols that I'm looking at too. Oh gosh, what's that one that guy mentioned? It's United States antimony. Um, right now it's been actually I had a really good buying opportunity. I think I actually might buy some of that, just a couple shares. But this has a lot of room to run in it. It's antimony, which is another precious metal. But you can pretty much pick and choose anything you want. There's palladium, silver, platinum, gold, copper. I mean, you name it. Everything's pretty much going to be going to all-time highs from my expectations in terms of precious metals anyway. So still seeing some heavy selling, which I'm totally okay with just writing this out right now. Again, I have plenty of puts going, and they're not 0 DTs, they're from last week, so I don't really care too much about not being in a put right this moment. Again, I'm going to be waiting for either the call on the downside or the put on the upside, and we will get one opening up eventually. Even if that means, for example, say on QQQ and SPY, say this pulls down and then starts chopping in this range for most of the day. Well, then what's that telling us? Very likely that's going to be a right shoulder on this head and shoulders, and we can head downward. But from that, it would be pulling down the upper Bollinger at the same time, which would very likely give us that short entry. So we will be patient. No reason to enter anything early just yet. Within HIG, it's basically holding the same level still, so nothing exciting there just yet. And our VVIX has been ticking upward, but on the 5-minute time frame, it is starting to push into the upper Bollinger, which means that we can be seeing, potentially a reversal within that. Could give some room to calls, but again, I will be waiting for the lower Bollinger. So if we're going to be seeing the call entry, then it will be around that 736, which I'm going to start watch listing some options here. So for the calls today, we're going to watch list the 738s. Because again, if we're going to push down, we're going to push down basically all the way to the 736. Excuse me, I'm trying to get this all taken care of really quick. And then for the puts we would be targeting the 739. And again, these are just the 0 DTs, so you feel free to watch list those. That way, if we do get an entry onto either side, we can quickly enter. I would not take the puts just yet. No. Again, the entries are either going to be in the upper Bollinger for a short or lower Bollinger for a call. Okay. Um, we are very strict on that because one way or another, the entry will open up on the day. We just have to be patient enough to wait for it. So no reason to rush this just yet. Semiconductors not giving us our call just yet, but getting very close. So with semiconductors, what we will do is probably take the 9 puts. And again, that would be basically just as a day trade. Um, for the upside. We could also take the Soxel 170 calls, but those are going to be far more expensive. Again, the SOXS is naturally, by inception has a week expiry. So these contracts will be costing a little bit more um, than some form of 0 DT on semiconductors, but the SOX series does not give us 0 DTs, unfortunately. So potentially we're going to have a call entry very soon here. The lower Bollinger is at the 507.87. But with that said, very likely we go down all the way to the 506.84, complete this inverse cup. Then we build bullish structure at the bottom, create a handle down, and continue downward. Sorry if you hear my stomach growling. It's hungry, so I apologize. So SPY here, kind of the same story, but we don't have the price action just yet. The lower Bollinger is at the 737.12. Now we would have to pull down quite a bit to see that same type of price action we would see out of semiconductors. So again, just be patient all the way for this 506.84. Okay, if you're wanting to get into those Soxus 9 puts, okay? Still have a little bit of room to go before we can take those. And those 9 puts, you would exit the majority of them at 20 mil. You'd be basically just taking them almost as a 0 DT, even if they are Friday expiry. But wait for it to push down all the way to the 506.84. And on SPY here, that should give us this 736.95. Okay, so we will be looking for around that 736.95, basically 737 range to take calls. These will be fairly short-term calls because the day overall is bearish. Um, and we don't want to be writing calls too long into a bearish day. VVIX still pulling upward, but again, with us seeing some of those call entries getting ready to open up, not just yet, but they're getting close. Um, we should be seeing the VVIX pulling downward slightly towards this 20 mil, and then if we're going to be seeing the selling, it will bounce around that 20 mil range and give us the full downside. Where did those SPY calls that I added to my list go? There they are, okay. So we're just being very patient here. Success, or semiconductors, excuse me, giving us our level. So if you want to enter some of those Success 9 puts, that would be the nine, or now would be the time to enter those. And you could enter those basically all the way in the money. Because if we're going to be pulling down to the 5 mile or to the 20 mile here, those should run basically in the money. Um, I don't have any of those lined out, but I do want to take a look at them. Just 1 second. So those 9 puts are about 64 each. A little cheaper than that, might be 62. So we're going to take 2 of those. And again, those are the Success 9 puts. I'll type those out in chat. It's because the IV is starting to climb. So during the rally to the upside, um, what you would see is that you would see the call IV increasing very drastically, whereas you would see the put IV basically decreasing. Um, that works the exact same in a bearish situation. So if there are more people starting to buy put contracts, then the IV within those contracts will increase, which unfortunately does work against you because it does, well, it actually works both in your favor and against you, but if you're getting the price action you're expecting, then it's going to work heavily in your favor, um, because that IV will also increase basically the price of what you're getting on your contracts as well. So SPY, we're waiting for our entry here. And again, these will be the 738 calls to the upside. but we're waiting for this lower Bollinger to push. We're not going to enter early, so be super, super, super patient, please. Sorry if you can hear my stomach still growling. I apologize. Come on, give us our entry already. I want to take a look at QQQ really quick without skipping over SPY. QQQ very close to giving us our entry. Um, Potentially we could pull down all the way to the 704.70. If that happens, well, this cup wasn't validated regardless, but it would create this major inverse cup to the downside. Okay, so if we can get that 704.70 push, basically the 705, um, that would be a very, very, very quality call entry to the upside. And that would also reflect our push downward within SPY, which again, I'm not expecting this push downward all the way to the 734.70 right now. I expect more so to see this push down towards this, what level were we looking at? Basically right at that 737. And from that, build out this right shoulder, and then we can head down to the 734.70. So that's kind of the plan today, is that we're going to take the calls towards that upside. Um, Upside being, again, the 20 mo. Might be the upper Bollinger if it starts pulling downward, but we will be targeting the 20 mo for the majority of our positions regardless. So those success puts are very nice to enter. Do have the entry on that. And I did take a few of those. They are slightly red, but I'm not too concerned about that right now. Even if they are red, sorry, that's a SPY alarm. I have to turn that off in a second. But even if we are slightly red in the success puts, we do have puts, actual puts going throughout the market overall. So basically having semiconductor calls against those puts would just be a hedge. So buying those puts are good regardless, um, because it'll hedge some of this downside. Now I do want to see the VVIX here. So VVIX is pulling down very slightly. It was at the 94.32, currently at the 93.99. I need to get rid of this alarm. Hold on. That is going to drive me crazy. Let's change it to below 737. All right, so let's take a look at semiconductors here. Still pushing downward, so this is still telling us that very, very likely this gap to the 497 is very likely going to be taken today. So we will just go ahead and highlight that. If we pull down all the way to that 497, we will add a few more of those SOXS 9 puts. But currently we're seeing a little bit of buying out SPY. Now this can be that right shoulder, even though it doesn't look like the best type of neckline, but again, we don't judge. Um, we just look for the liquidity. We can start forming that right shoulder liquidity in there. Again, I'm not taking any positions until we push into the upper Bollinger or lower Bollinger on Spire QQQ. PQQ almost gave us the entry, but not quite. And the VVIX is pulling down quite a bit, so it's at the 93.52. A little bit of buying out of everything so far. Now, on these SOX S9 puts, we will be exiting some of them at the 20 which is currently at 514. So we do have a lot of upside within semiconductors if we're going to be, getting the actual upside that we're expecting. Yeah, it's okay. It's okay if you see the watch list falls going up or down. It's always better to be super patient than it is to just kind of FOMO into a position, because that can heavily, heavily cost you. Now, we haven't gotten any positions yet today on SPY because, again, we need to wait for our entry. Our entry has not hit yet, and because of that, we're just going to be super patient. Now, if you want to vibe trade, that's fine, but that's not what I do. Um, I focus on very, 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 very consistent trades, and we will be doing that regardless. So we'll not rush into any positions here unless the entry is actually available. And a good example of that is like on semiconductors, we saw our entry within the lower Bollinger, which we grabbed about there. And from that, um, that's a very quality position to the upside, assuming, we actually do get the full upside that we're expecting. Um, that those are going to turn into a very quality position. Yeah, it's awesome to see everybody. Thanks for joining. We will find positions today. I'm not really concerned about that. Um, if you're brand new here, I keep my trades super, 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 super consistent. Um, that's just something I focus on is it's better to have perfect entries than to try to time perfect exits. Okay. Um, Now if you can do that with both sides, that's great. That's ideally what we do try to do here. But perfect entries will give you a lot more running room on your contracts than just trying to quickly scalp in between. Now, can you do that? Absolutely. But we like our contracts to run a little bit. The whole goal is that with our zero DTEs, we want to buy basically at the money or out of the money very slightly and have them pull into the money very, very aggressively. Um, to do that consistently, you have to target the lower Bollinger or the upper Bollinger for those entries. Um, you know, that's just back tested data and everything. So that's what we do. We be very patient. See, my SPY 739 put got rug pulled. That's correct because there wasn't a put entry yet. Um, and I'm not I'm not trying to say that in a rude sense, but we did not have the put entry. So any of the puts that you were going to take, you would have to be in and out within, barely any time at all because the actual structure of the trade was not there. Okay. And the same thing can go for calls here too, even though the call upside is looking, very nice to hit the top of this cup here, potentially take us all the way to the 743.46. However, we still be very, very patient. The way I try to trade is that even in the worst case scenario, say you're buying a contract that's entirely running against the day. Um, if you have that really, really good entry, you're at least going to get an exit that's usually going to net you at least a zero, meaning, not a big loss, not a big win. You're just zeroing out, which that is a very big win for 99% of traders. Most traders cannot trade to even remain neutral on the day. Um, so saving those entries um, allow you to exit a lot cleaner as well. Um, Now SPY here, I just want to delete some of these drawings a little bit as we are starting to get close to this upper Bollinger, which will create a short entry. So hopefully we can push all the way. The upper Bollinger is currently at the 741.87. So we will be basically looking for that 742 range um, to take a 0 DT put into. And again, these puts that I am looking at here are going to be the 739 puts. Not entering them just yet. We're waiting again for this upper Bollinger push here. See, where is the 5 mile? 5 mile is at the 741.60. Okay, so we might be getting an additional 5 mile test here, which that's completely fine. That would actually give us a lot of credence to our short position, is that we would be seeing that upward 5 mile retest, very, very likely reject it, continue out this bearish structure. So if we can get our entry, that would be very, very awesome. QQQ is really, really chopping at this right shoulder here. So it would be nice if SPY gave us our put entry because puts look super, super good still. And again, the puts that I'm looking at are the 0DT 739s. So keep them watch listed, whatever you want to do. 738s would be acceptable as well. But again, I am targeting the 20 mile. Um, we'll be buying 4 puts at the beginning. If there's an additional entry, then I'll just continue adding on, 4 puts at a time and just going from there. But no entry just yet. And it might seem counterproductive, but I would rather have a day where I don't get the perfect entries and I take 0 trades than try to vibe trade and make a little bit of money without having those perfect entries. So I do apologize if people are seeing some of those watch listed calls going crazy and not being able to really take profit on that. Um, But for my style of trading, I'm always going to be waiting for our, you know, very, very well timed entries. Semiconductors still just absolutely getting torn down right here. So it's very likely we do see the bottom of this gap, which again is all the way at the 497. So if we push that range, I will tack on a few more of those SOXS 9 puts. Now our VVIX is at the 93.05. It did pull down to basically the 93.02, so it is very, very, very close to the low of the day. Seeing a little bit of buying out of semiconductors, which can give us our SPY upside. Again, we're still looking for that upper Bollinger entry before we fully enter. Absolutely. That's the way I like to think about it, is that wait for the extreme high conviction trades, and those are the ones that you can make absolute bank off of. Um, if we're just going to sit here and chop, and yes, we do have structure, okay, we do have this small cup, we can be forming a little handle, but what does that do for us regardless? That gives us our upside that we're looking for to enter into those puts without really invalidating any of the bearish structure. So, um, absolutely, waiting for those really pristine trades with a lot of runway to them is going to be more profitable than just trying to force trades in between. Some traders can do that, and you know that's totally up to you. You're welcome to scalp on the 1 minute time frame, which that's something I really don't like. Um, but it is something you can do if you really don't want to be patient for that entry. Hello, good morning. Ah, yes. So the indicator I'm using is called the accumulative distribution line. So the ADL. I said that right. Accumulation distribution line. Excuse me. Um, this is pretty much the only main indicator that I use because this tells you essentially the money volume, which if you ignore all the drawings and everything, if you ignore the Bollingers on SPY, if you're just to look at this as purely candles, right? What's our current price action telling us? That we pulled down, we saw a little bit of buying, and now we're seeing selling. So this is monitoring basically the money volume going into the fund or out of the fund, or symbol, whatever you're looking at. So when we're seeing money essentially flowing out too, that's not exactly bullish conviction to the upside. On semiconductors, we're seeing this just pull straight down, um, which again, that's pretty much telling us we're going to hit that bottom gap. That bottom gap is at the uh, 497.65. So if we do hit that range, 497.80, excuse me. So if we do hit that range, um, we will be tacking on a few more of those SOXS 9 puts. Thank you. I got coffee now. It's go time. And let's check the HIG. Let's check all of our instruments here. See oil rising a little bit. HIG still holding that 79.60 range on the day. Excuse me. Don't mean to yawn in your all's ears. But HIG's still holding the 79.60 range, which For us, it's been pretty much sitting at that level the entire day. That's not really indicating buying or selling. As I say that, it pulls down very, very slightly. So that does indicate a little selling. Now again, on SPY, we're just going to wait for our entries here. Semiconductors got very close to the bottom of that gap, but not entirely yet. Again, I'm still fully expecting them to hit that level prior to really seeing much bullishness out of the market. Let's take a look. Service. Oh, So now is forming a cup. So from this cup, very, very likely form a handle. Very likely trying to form this cup up to that 105. Funny, it almost hit the bottom of this liquidity range that I talked about, almost to the T. Then there was one underneath it at the 68, if I remember correctly. But very likely this is trying to form this larger cup to the 105.16. Okay, so you can look for that. I do want to go back to the SPY. I want to make sure we're not missing our entries or anything. QQQ does have this very nice inverse, I can't talk, inverse cup and handle, excuse me. Semiconductors pulling up slightly. SPY pulling up slightly, so if we can get, again, the upper Bollinger, then that will be a very, very quality short position on the day. And I'm going to be taking 4 of those. If you have a smaller portfolio, I would only suggest taking 1 or 2. Never just all into a position, even if it's a high conviction trade. Um, High conviction doesn't mean anything in the market when, you know, all it takes is a tweet, some news, something to come out to entirely change the position. So never go all in. Um, but yeah, usually I try to tack on 4 positions at a time. Um, the reason for that is that I can exit 2 to 3 of them at, that 20 mile range when we are expecting our exit, and I can leave the runner to run. And if I do need to tack on more positions throughout the day, so for example, if we say this was during the intraday and not during the open, say we had that the upper Bollinger move, we took the puts there, puts didn't get down to the 20 mile, and now we're having to ride those puts all the way back up to the upper Bollinger again, tack on more puts. Well, I want to be able to tack on those additional puts to fully get that exit. Okay. So that's why I take only a few positions at a time and build the position up, because if it's going to be a good entry, then those puts are going to run super, super hard. If it's not going to be a good entry, then I want to be able to have some cash left over to be able to continue, to enter later on. Yes, the drip 5 calls for June are very, very, very good still. Thank you all for watching so far. It's really nice to see everybody this morning. No, we have not taken many trades yet. The only trade we have taken so far is a few of the SOXS 9 puts. I can pull up SOX. And the reason why we took that is because we did have this lower Bollinger push. Okay. Um, However, it's looking extremely likely we're going to try to fill this gap to the 497. Okay. Um, but if that's not the case, if we do start heading up to the 20 mile, we will again use the 20 mile as an exit for those SOXS puts. Now let's check the SPY because we are looking for our entry here. Again, the upper Bollinger is at that 741.77. So if we can get that push up, another $1.50 from here, then that will be a very quality put entry on the day. And I want to see the VVIX. VVIX has been pulling downward, so it was all the way at the 94.32. It's currently at the 92.93. So pulling down slightly. This is telling us that we are going to be very, very likely getting our put entry on the day. I'm not in any of the um, zero DT positions just yet. I'm waiting on those. Only in the Soxus 9 puts for Friday in terms of what I've taken today. I still have a bunch of puts and stuff from last week as well. Let's check QQQ. QQQ gave us a little bit of a call entry here, um, which unfortunately I missed. That's unfortunate. That would have been a really nice call. So I'm just continuing to watch SPY, continuing to watch semiconductors, waiting for an entry. BVIX still pulling down slightly, telling us that the bullish upside is, coming in very likely. And I believe our HIG pulled up a little bit too. Our HIG pulled up towards the 79.65. It's currently at 79.64. There's also just a very large share sale, literally about 30 seconds ago for 265,000 shares. So quite a lot of selling there, but we do tend to see that out of the HIG. Again, it's usually only traded by like super, super, super large institutions. So we see massive blocks taken both to the upside and downside. So I really don't. I mean, I've been adding a little bit of the Glad shares, in some of the financials that I was talking with Silverliner about, but the sector overall has been absolutely beaten down. And with it being beaten down, that gives, a little bit of a buying opportunity. The buy opportunity, unfortunately, looked like last Monday or Tuesday. So I would wait a little bit, especially if we're expecting a little further selling out of the overall SPY and out of tech and everything. We should see financials pull down as well. Oh, the September puts, yeah, those should be fine. You just have to be careful with adding close to that lower Bollinger because those positions definitely can get you. Um, but overall, I do see a lot of weakness in the sector, and I do think that, with the bearishness and everything we've been seeing throughout tech and whatnot, we can expect financials to head downward a little further. Oil was down to 98.60 today. Currently slightly over 100. Semiconductors giving us a little bit of buying, so let's see our SPY. Again, we're looking for our entry on SPY puts here, so we need to have this upper Bollinger push on the 5-minute time frame, and that will give us very, very, very quality puts to the downside. Sorry if I sound very tired today, everybody. I did not sleep very well. I just want to look at all of our positions really quick. Sox calls from last week are doing super well. Same with those TQQQ puts. The silver calls are up, but not up very much at all. The USO 90 strike puts, I will be adding to some of those very likely over the next few sessions. Maybe even today, I don't know just yet. The TMF puts for August 21st are down still quite a bit. Um, obviously with the CPI and PPI positions, or those prints being very hot, um, will increase the treasury yields, which will directly work against us in TMF/TLT. But at this point, that's kind of just a hedge position, moving forward into the next few months. Yeah, absolutely. I wouldn't worry about those success puts just yet. Um, Again, a lot of our symbols are telling us that we should be seeing some upside, especially with success here. After we do close this major gap, once we close this massive inverse cup here, okay, this will invalidate this bullish cup, which that's fine, that's perfect. But what this will do is give you a very, very clean opportunity to take the puts all the way from the, the 497, basically the 498 range, all the way back up to the 510, maybe 507, 510 range, which for Soxus will do very well for us. Okay, for those puts, those will pull them down, um, potentially into the money. So just need to wait for that additional entry on those Soxus puts, before continue to add into them though. Let that gap be hit on the downside. SPY looking very good for our upside so far. Again, we're expecting the upside so we can take puts to the downside. Now I'm going to mute just for a couple seconds, but I am here. I just want to take a drink of my coffee, so I will be right back, but I will unmute almost immediately if we start getting our entry. All right, I'm back from my mute. My wife's heading out to work, so I just had to say bye really quick. Okay, so everything so far, we're just simply waiting. Our VVIX is pulling downward, very likely going to pull down to the lower Bollinger here. From that lower Bollinger, that is telling us that very likely there will be some of that short upside. Okay, upside on VVIX again is downside within the markets. So if we can get this push, like I've been really waiting on, be really nice if we can get our entry here. I would like to trade something. And you see, even with QQQ, this is a perfect example of why you wait for those perfect entries. Because if you didn't, you would have just been sitting in chopped contracts on both sides. Um, Whereas if you took the call from the very bottom to the 20 mile there, you would have had basically a $3 upside, $4 upside, give or take. Um, where most people would have just been chopped to pieces, losing money on their contracts. So it's always better to be patient, even if it is boring and not ideal. Nope, I have not taken any of the puts yet. Can you hear me now, Silver? We're waiting on the puts at the upper Bollinger here again. And that's the upper Bollinger on the 5 minute time frame. And always be very, very, very patient for positions. I don't like my contracts being chopped up at all. I like very, very clean contracts. I like my contracts to get the movement that I'm expecting. Um, if you take positions that are not outside of the Bollingers, then you should 100% expect those contracts to get chopped up. And that's kind of just the unfortunate part of zero DTs is that you do have to time your contracts very well. So we do want to be very patient, even if the chop is, boring and you might be watching contracts, in the watch list, for example, move, but it's just gonna chop until we get our actual move here. My current time is 7:25. I'll tell you exactly when it turns. Well, excuse me, that means 10:25 for everybody else. Um, I'm on the West Coast. It just turned 10:26, so 7:26 for me. Um, shouldn't be too much delay on the stream at all. I don't have it set to have any form of delay. Let's check success here. Yep, and that's the thing. So that's why I know you added 100 of those puts, which really we always have to take a few at a time, okay? Because if we're going to get this push up here, then what does that mean? That means you're gonna have to add more. Um, which is just kind of the unfortunate part of how we take our entries and exits. Very choppy day so far out of the SPY. 1 minute time frame is at the lower Bollinger, which can give us that upside, but it does look like it's trying to form a little cup or a little inverse cup here. Now, Sox is potentially going to be giving us an entry. Now, this entry isn't going to be at the bottom Bollinger here, because the Bollinger is expanding very, very aggressively. Again, Sox has lost basically like $30 today, almost give or take. Well, no, $20, excuse me. I misread that as a 3. Um, but we're targeting this downward gap now, because that downward gap would be the bottom of a major inverse cup. The bottom of an inverse cup, we expect bullish structure, which means that we would be expecting that upside. Okay. So perhaps we just need to wait for the market to chop to that level for semiconductors before we really see the SPY upside that we're expecting. And again, the bottom of that gap is right at the 497.80, which it's looking like we're about to hit that level. Yeah, so I'm going to be adding a few more of the SOX S9 puts here. Not many, just a couple. And I'm adding them now. Okay, so I bought that for 0.41. And now let's take a look at QQQ, SPY. QQQ might be giving another call opportunity. Um, Waiting on that though. Ideally, I'd really like to be able to take a SPY put today. Um, that's really what I want to take. So hopefully they can give us our upside push on that already so that we can enter our put position. VVIX is at the 91.98, so that is heavily supporting that upside push, even though we're seeing semiconductors going into the basement right now. But we did buy the bottom of the gap, so we should be expecting a bounce. Now this bounce, currently we're expecting to the 20 mile, which the 20 mile is pulling down very aggressively. So that 20 mile is at the 508.90, so almost at the 509. But that is the range we are looking for. QQQ potentially giving a call entry here. This can pull all the way to the 704.70, so try to look for that if we're starting to push into that lower Bollinger. Look for that 704.70 before entering the calls to the upside. And SPY, where's SPY? SPY is not giving us anything yet. With semiconductors pushed down, with QQQ looking to push down, hold on. Then I would just try to close the, but pretty much at any moment if it's green here. Um, I I'm gonna say this and it's gonna sound rude, but I don't mean it in a rude way. I didn't like your entry on that put. Um, so if you're green, I would absolutely take the money on it. It was not a very ideal entry just yet because it wasn't above that upper Bollinger. Um, so use the green to your advantage here while you do have it. If not, then you're gonna be very likely seeing some form of upside before we head down further. Pig is down to the 79.60 again, so it's gravitating very hard to that price. and I mean that full well, by the way, is that I would say that to anybody. If you trade in between the Bollingers, then you're really, really asking to, have your contracts burn. Um, Obviously, there's money to be made in here, but you're not gonna get that super pristine entry. Um, and it can cause a lot of issues with your contracts. So that's what I mean when I say you didn't take a great entry. Um, you took an entry that absolutely could have gotten chopped up very, very hard. Okay, and you're lucky that we're even getting this downside right now. Because this could have very, very easily continued pulling upward. So I say that with love, even though it might sound rude. QQQ giving us our entry on the calls. So I actually do want to take some of these QQQ calls. I don't have any priced out. I want let's check the 709 calls or 708. Hold on. QQQ. Sorry, I'm trying to get this up on my phone really quick. The 708 calls are fairly cheap. Yeah, we're gonna do a 708 call here. Okay. I'm only gonna take two of them. So I got that filled at 110. Can push down all the way to the 703.24, which very likely now that I see that happening, very likely that's gonna happen. I'm completely okay with just holding the call though. From the bottom of that gap, should be expecting that handle to the upside. So was a little early with that call entry, but just barely, and I'm okay with that. We do have a call entry on SPY here as well. So with SPY, we would again be targeting the 739 calls or 738s, but I want the 739s here. So hold on, I have to. Okay. Went ahead and added a few of those. And again, these calls, we're simply just looking for the 20 mile for the exit. The day is not bullish by pretty much any metric here. We're simply just looking from the upper Bollinger to the 20 mile. Just for a nice, easy and structured trade. So that will be our exit. Let's check QQQ. Yep, hit that gap. So from the bottom of that inverse cup, we do expect bullish structure, which should give us, again, our exit towards this 20 ma. So I do like our calls here. They're not bullish calls, these are bearish calls, which I know it doesn't make a whole lot of sense, but we're buying calls into bearish structure, expecting, continued bearishness. Um, but that just means we're trying to take liquidity. Um, so yeah, I like our call entries. I'm in the SPY calls, in the QQQ calls, and I'm in the SOXS puts. From the bottom of that gap so far, we are starting to see a little bit of upside. So this is, again, kind of what we're looking for. The bottom of these inverse cups, we expect bullish structure. Okay, so that means that we should be getting our upside bounce here throughout semiconductors, SPY, QQQ, basically all the stuff we bought calls in. And we're just looking for the 20 mile to exit today. Okay, today is a bearish day. And yes, these are for all 0 DTE except for those SOX S9 calls, or the 9 puts, excuse me. Those are dated for Friday, but that's just purely by inception. We can't really do anything about that. So I want to write the exits here, just so that I ensure everybody uses them. So 20 mile, 709, 20. Okay, so that's for QQQ. Excuse me. Or SPY here. And if anyone could type those in the Discord, that'd be super great. Um, just because again, I don't have it set up entirely to where I could type it everywhere. And then this is the 739, let's say 46-ish. Okay, so that will be the call exit, which looking at our calls, they're up. The SOXS puts are down still. And the QQQ calls are up. So those will be our exits. And for semiconductors, we are again using that 20 mil here. Sorry, I haven't had a whole lot of time to read chat today, everybody. Might be a boring day, but we're still looking very hard for quality entries and exits here. Okay, so that should be our expectation is that, let me put that inside the box. There we go. Is that we should be seeing some buying to our 20 mile ranges. The VVIX was at the lower Bollinger. It did pull up very slightly, and now it's pulling back down towards the lower Bollinger. Could pull up all the way to the 20 mile, but I'm not expecting these levels to continue pushing down too much further. Um, as you can already see, we're starting to form some of that bullish structure, even if just very slightly. For the Soxus 9 calls, um, we have the 9 puts today. We have the 9 calls from last week, which we're still going to be holding those. Those are dated for, I believe, next week. Yeah, the 29th. So plenty of time for us to continue holding those. Okay, and we're starting to see our upside a little bit on these calls, which is very good. Now, today will be a little bit of a different day where from this call exit, we're going to slightly enter into a put, okay, because there is a lot of opportunities that this is going to be that inverse cup and handle to the downside slash forming that right shoulder, okay, um, which means we would be seeing quite a bit further downside. So we will do a very cheap, basically out of the money put ad, at this 20 ma. And if we pull up to the upper Bollinger again, we will do the primary puts that we were looking for. But today, when we do pull up to the 20 mile levels, we will add a few out of the money cheap puts. Semiconductors starting to pull upward. So we have a lot of room to pull upward. That means SOXS has a lot of room to head downward. Now, everybody's calls should be doing very, very well here. And again, we're just going to be using the 20 mile for the exit. Yeah, I mean, I think we nailed the SPY calls and the QQQ calls almost to the penny. QQQ, we could have entered slightly better. Um, but it was still a very quality entry. And the VVIX is at 92.32. So it did pull up all the way to the 92.75. Currently 92.39, so hold up just a little bit there. So at this point, we're just waiting for our call and exits, which again are those 20 mile levels. The HIG is at 79.58, so it did finally break through that 79.60 range. Now I'm going to go ahead and set some conditional orders for these calls because I basically want to exit them right at the 20 mile. Um, so for Weeble, I'm just doing the market conditional orders, setting it so that if the price is above, it's the current 20 mile, 739, and let's set it for 739.17. Okay. So if the price goes above that, I will let them go ahead and just take my calls. And I'm going to set the same thing up for QQQ. So QQQ, it is at the 708.68, which means that those conditional call orders, see, mark conditional order. I want to have that close out at 708.57. Okay, and now we wait. So I want to look over sort of the entire market for a second while we do have our calls doing what they need to do. I do want to just look at the VVIX again. So VVIX at the 92.53, so pulling upward very slightly. So that will be somewhat of a downward chop for us, unfortunately. Semiconductors here still holding, but potentially starting to build additional bearish structure. So we have to be careful for that. But even from that bearish structure, we should expect a very slight upside bounce. Edit this to 708.7. And let's check SPY here. Hold on. So SPY still expecting kind of the same conditions. Just put my exit level. So we're still expecting that 20 mile push to the upside. Now our VVIX is pulling downward very slightly. It did pull all the way up to the 92.58 again. It's back down to the 92.28. So that is telling us that we should be seeing a little bit of that upside reprieve. And we will just be very patient for our exit. We're not going to get shaken out of our positions or anything here because again, with the bottom of these, excuse me, the bottom of these inverse cups formed, with the bullish structure starting to form, we are fully expecting our upside here. So don't shake out of positions. We also have the VVIX pulling downward, which is telling us that we're expecting some bullishness. Yeah, the market conditional orders are really great. Um, what it does and what it's really telling you is that if the condition for your market price hits and you can set it to greater than, less than, equal to, blah 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 whatever. Um, if that level hits, it's just going to put in a market order, not a stop loss order, not a limit order, not anything specific like that. It's just going to market sell. Um, which for me that's okay because I don't really care about you know, the pennies here. I care about the trade itself. Um, was the trade structured and did it work out? If yes, then I'm going to get paid on it. If not, then I need to reevaluate that trade and see why I didn't get paid. Semiconductors having a very hard time today. SPY is still looking very good for our upside though. And let's take a look at the Qs. QQQ still looking great for our upside. We will need to move that upside target down slightly. So what do I have it set to? Hold on. I have mine set to the 708.57. We're gonna need to set it to 707.97 here. Which means that, unfortunately, slightly our upside is slightly closing on us, which it's okay. Um, for these 0 DT contracts, we want to just ensure we get our profit. Now, these Soxus 9 puts, we have a little bit of work to go. Semiconductors need to have that large upside bounce. SPY here, starting to look good for the upside bounce. So our calls should be called out very, very soon here. And again, when they do, I'm just gonna allow them to take them for the conditional market order. Completely fine with that. Starting to see a little bit of buying out of semiconductors, so that's good. So I might try to move my SPY order up just slightly. This might be a mistake. You know what? Because I just said that might be a mistake, I'm not going to do it. So, no, I'm not going to move my order. It's going to stay right there. We'll just go ahead, let those SPY calls get taken, and then we'll reevaluate the market at that point and see if we're going to work to position some puts or, you know, wait for whatever next position is coming. Nope, I have not closed the SPY calls. We'll be closing those again at that 20 mile. And this is why we trade super structured. Um, Again, I know it sounds kind of dismissive, but I don't mean it that way. But trading in between the Bollingers here is basically vibe trading. Um, Vibe traders do not last long. Their portfolios blow up because they are not looking for pristine entries, and they don't know how to exit. Okay. With this method, you're finding the best entries, and you may not always have the best exit. For example, us exiting when we do get our exit at the 20 mile, these calls could still run. Okay. And, potentially we'd be leaving money on the table, but I don't care at that point. It's a red day. I see a lot of selling signals, and I do see at least us hitting this 20 mile. Do I see us really hitting much further above that? Not so much. It's been a struggle to even get to this level. So now for the SPY, I am going to move this order down just a little bit. So I currently had it set to the 739.17. I'm going to move it to the 739.07. So I always want it to be slightly below where the 20 mile level is, even though I expect the 20 mile to hit, and pull slightly above that level. But I usually start trying to exit slightly below that level just to, 100% secure profit on a lot of those contracts. If we have runner contracts, then you can allow them to run. Today I'm going to be selling pretty much like every single call besides two of them. So, um, I'm not expecting too much of a run above that level. We're seeing tech still struggle. We're seeing semis still struggle very heavily. And our VVIX here has been pulling down, so this is a bullish signal. This is good. And it's almost up to that non-cautionary range, which I do think we get a massive bounce off of that. Over the last few sessions, though, we have been seeing the VVIX just pulling down, even though we've been actually selling, which is very weird. Um, that dealers have not been, you know, hedging this like crazy. But that might mean that they're trying to sell off this top through selling CCs rather than trying to just ride puts down on the market. But regardless, it doesn't make a lot of sense. As a dealer, you should be trying to enter into some of those insurance positions. So seeing the VVIX pull down the last two trading sessions while we've been literally dropping dollars um, is definitely a huge divergence. Just waiting for our call exit, and we can work to evaluate some additional trades. Do apologize. Today has been a slow slash boring day so far. Fortunately, I can't move the market any faster. Unless I start drawing more arrows, but today is just not that type of day. Today's the type of day where we just allow for very, very consistent, safe trades, even if it's much slower. My highest was I, I really don't like to say it. Um, yeah, maybe we'll save that for later. Um, it's not something I like to talk about. The reason why I don't like to talk about the big wins is because it leads people into gambling, which I heavily do not endorse at all. I am strictly against gambling on positions. Um, let's say it was well above the 5 digits. Still waiting for our call exit here. Now on the 5 minute time frame, we are seeing our ADL, which is basically the money volume, starting to taper, which means it's starting to pull away from the selling side. You see it's starting to slowly curve up a little bit. That's good. That's giving us a lot of credence that we should be seeing our 20-mile exit. And with the VVIX pulling down, um, that's telling us very, very much so that we should be seeing that upside exit. Now, the HIG has been buying up a few cents, which for the HIG, this does matter quite a bit. Um, it's currently at 79.62. So that should definitely be meaning that SPY, QQQ, we should be seeing our 20 mile upsides. Excuse me. A little less than that, Anna, but very close. Let's just say it was above the 80, below the 90. We'll leave it there. Semiconductors starting to give us our upside. So let's check our success bits, which have been absolutely struggling. Okay, so we're looking like we're going to be getting our exit. Did we literally miss that exit by like a couple pennies? Hold on. Tell me that. That did not just pull up. Literally 7 cents off of that exit. Are you kidding me? We're still targeting it though. Um, this is all very, very supportive of this upside push, so I'm not too worried about that. But I am moving my exit down to the 738.99 because that is just beyond stupid. Then QQQ. QQQ is telling us that we have a lot of room to still move. Um, I have my exit set at, hold on. I have it set at 707.97. I'm going to set it to 707.17. Now SPY here going to be really annoying if they form an inverse cup to the downside and they ended up killing our exit by literally a couple cents. Um, I won't be happy about that. UVIX pulling up quite a bit. So it's at 92.14. It was all the way at the 91.28. It did pull up all the way to the 92.29. So, and I want to look at HIG. HIG is at 97.57, which is somewhat of a selling signal. So we're getting some massive share sales within SPY. Actually don't know if there was some bad news or something that just came out. So give me a second to look. Oh, it's because as of 2 minutes ago, Iran's new offer is insufficient. Risks war resumption, senior U.S. official says. So that's why we got that candle downward right as we were literally trying to time our exit, which is beyond frustrating. We're literally 7 cents off of that exit. Let me go say bye to my daughter really quick. Then we'll be back to reevaluate everything, but we should still be expecting our upside here, even with that news. So I will be right back in like 5 minutes. Sorry, I'm back. I just had to say bye to my daughter really quick. So I am still holding spy calls. Um, Unfortunately, they didn't give us our exit. My exit was set to 7:39:07. They gave us the 7:39 on the dot. And then there was some bad news dropped by a U.S. official where they're saying that the deal out of Iran was basically not acceptable. Hold on one second. All right, I'm back. Sorry, I had to get my daughter a jacket. Okay. Yeah, so basically, it was just USA did not like Iran's new deal, which is unfortunate, because if we continue pushing downward, that's going to push us back into the lower Bollinger, which means that I'll be adding more calls, which kind of wasn't ideal. DVIX pulling up slightly, so 92.22. Yeah, I'm kind of disappointed about that call exit. It's very frustrating when something like that happens. PQQ here though, still telling us that we have room to this upside. So we are looking for that. We are still looking for our 20 ma. The entry or the exits have changed quite a bit, unfortunately, due to that bad news. So make sure we get those properly adjusted. Because regardless, even if bad news happens, with us entering it at this lower Bollinger, worst case scenario, we're gonna cut even. Um, which for me that's a win. That should be a win out of anybody's trading book is to be able to just cut even on a situation that wasn't good for you. So again, if we do push down to this 736.44, which again that will very likely trigger this lower Bollinger, I will be adding more of the calls. Um, Not a whole ton more, but just a few, and we will still be targeting those exits at the 20 mile. Let me go ahead and get my conditional orders reset because I do want them set very specifically. Yeah, not ideal when your limit order gets cut out by 7 cents. Or even in your case you had it set literally to the penny and because of that it just did not cover. Very, very, very unfortunate. So make sure you reset your conditional orders. Get those new levels, added on with the 20 mods pulling lower. Um, Fortunately, with the 20 mods pulling lower, we still have to target them, which means we do have a lower target on the, original exit. But that's how you get your exits. Um, this unfortunately caught us literally right to the 20 mod to the penny. Um, and we just did not set the conditional orders in time to catch that. That's why I usually try to set my conditional orders slightly underneath where the 20 mile is at. Um, that way it will usually catch it. So kind of bummed about that one. Because that would have been a really nice, clean opportunity that a new set kind of ruined. But holding those calls, again, I will be adding if we push down further. Now, I want to see the HIG after that news. It's very likely the HIG is going to be continuing to pull down. It's actually not doing too bad. It pulled down all the way to 95, or excuse me, 90. I can't talk. 79.55, and it's actually been pulling back up a few cents. So, still looking for that upside 20 mile exit. Again, especially since QQQ has not had that opportunity. Um, Dealers are usually going to try to be looking for that regardless. Even with news hitting. BVIX still pulling downward. Again, it was at the 92.23. It's currently at the 91.89. So we can still be looking for our upside here, as sketchy as it is. And on the 1 minute time frame, we do have smaller inverse head and shoulders building, which, if it doesn't turn into an inverse cup, will allude to further upside. So we'll be watching for that. And let me change my SPY alarm here so it doesn't keep going off every time we cross under 739 or 737. Set it to 736 something. Okay, so if we push down to the 736, 44, I will be adding additional calls. So far on the 1 minute time frame, we still have this bullish structure, but this can be broken very quickly, so just be very, very diligent here. BVIX still pulling downward, which is still telling us that dealers are not hedging the downside. Okay, as long as dealers are not hedging the downside, we should be expecting a little bit of this upside reprieve. So I'm watching this on the 1 minute time frame. Usually I only watch the 1 minute time frame for microstructures, and that's because we want to make sure we're actually heading up to this 20 mile here and not going to continue breaking down. So if we bounce, this is still a very solid bullish structure. Semiconductors, we did have bullish structure. A little bit of a double bottom forming there too, which that can give us our upside. QQQ just mega chopping today. So let's see if this inverse head and shoulders gets invalidated. If it does, I will be buying calls at the 736.44, and those will be the exact same calls. So they'll be the 739 calls. Okay, and I'm going to be trying to tack on a few here because we did invalidate the inverse head and shoulders here. Should be getting ready to push down into the lower Bollinger again. So from that, I'm just adding more of the exact same calls that we've had. Okay, and those calls are starting to buy. Perfect. All right, so again, from this lower Bollinger, we are looking for the 20 MA. This is one of those situations where we had to add additional positions. Not a whole lot we could have done other than set our exit a little looser, but from the stance of the trade, I still don't think I would have done a whole lot different in this situation, um, because we were pulling down our market orders as the 20 mile was coming down. So it's just unfortunate, but that's still what we're targeting. I'm adding the exact same strike. Okay, so the exact same strike we already have, just simply adding to that. Now our VVIX is pulling upwards slightly, so it's at the 92.18. Excuse me, it changed 92.09. So if we can see this continue pulling downward, then this will give us the upside move that we're expecting here. Maybe this is a blessing in disguise. We'll have to see. Um, yeah, that's what we're looking for. Now, today's stream will have to end a little earlier, so I'm going to be streaming probably about another 30 minutes, because I do have an appointment at 9 p.m. or 9 a.m. my time, which is, 12 p.m. Um, so I do need about 10 minutes to make sure I get there on time. Um, so hopefully we can get our upside and get out of these calls before that happens. I would like to leave or end the stream on a solid note. The drip calls you don't have to worry about. It's just the spread on them currently. On my end, it shows they're about $13 per. Those are going to land when oil when the oil volatility ceases, but currently that's not what's happening. Obviously Iran put out a proposal that was rejected, and due to that, that's causing oil prices to rise again, which directly goes against the drip shares. But I still, here's the reason why I've been so focused on shorting oil, because I know a lot of people have said I'm crazy. Um, the primary reason I'm still shorting oil is because it is in everybody's worst interest to have oil prices high, except for, the people that are actually pumping the oil and selling the barrels. Um, but even then, there's a lot of restrictions and stuff going on with what they can actually sell, where they can sell, blah 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 blah. So it's not exactly a huge boost to them either. I mean, obviously it's a major boost for their profits, but um, you get what I'm saying. From a global perspective, from running a country, you would not want your oil prices high. It causes inflation. Inflation causes a lot of issues. So it's in everybody's best interest to get these oil prices dropped, whether that's manufactured, um, meaning having a huge, huge, huge short position, tearing that oil price down the second we get the good news that the conflict's over. There's a very, very high potential that that occurs. The oil short interest has been absolutely obscene. So, um, is there a potential that we kind of get that downward squeeze? Uh, it's very, very real at this point. Um, so that's why I'm so heavily just continuing to short oil. Hold on, I have a phone call really quick. 1 second, everybody. It was a wrong number. Like, is Phil there? No. My name's Dave. So currently we're just waiting for call exits. With the bottom of these, ranges pushed, we are basically just looking for a continuation in the downside of VVIX. We're looking for an upside within the HIG. Now, VVIX again, very, very likely with it being around this 20 mile range, it can pull to that 20 mile and either continue upward and we continue selling throughout the day, or have a downward rejection. I'm looking for the downward rejection currently, as obviously we want to be able to exit our calls. Now, these lower Bollinger levels have been pulling down still very, very greatly. So we need to make sure that we are moving our price down in accordance. So we need to set the conditional order to 738, probably 738.37 at this point. Okay. And that's for SPY, and for QQQ, we need to set that. So let's see what our order's set at. Hold on. So we have it at 706.77. We're going to change this to 706 03. Yeah, that's what we're gonna do. So 70603 on QQQ is where we will be looking for that call exit. And even if that means you just pull even on your contracts, that's better than having a loss. So we will be targeting those levels still. Looking very good so far to the upside buying. Um, Not that we have bullish structure or anything formed yet, but with the bottom of this inverse cup hit, this really gives us a lot of upside to move with, because if they're going to continue pushing us downward, then what they're going to do is very, very likely want to build some form of upside liquidity. So we are looking for the upside, and I'm saying this as someone who is actively shorting the market right now. I'm saying this from a bearish perspective. As a bear, I'm expecting this upside push. Okay. Same with QQQ here. Now, they might go for this 702.72 gap before the upside push. Um, I'm not really too concerned with that one way or another. Semiconductors, still looking pretty gross. Then I think SPY just pushed down a little bit too. And let's check our VVIX at the 92.61. So we'll see if we see a continuation with this to the downside. Still really bummed about that 20 mile because I remember us even talking about that uh, before we took the calls, that we were going to take these calls and exit basically right at that 20 mile, and from that 20 mile we were going to work on taking some puts, but we missed the exit by a few cents. And because of that, now we're kind of just waiting in limbo, waiting for the next move. Again, I'm still in calls for the upside, even with some of this downside push. From the bearish perspective, I want to see some of this upside liquidity taken. And the further we push downward within this lower Bollinger throughout the entire trading session, the more it's going to create that release for an upside push regardless. And that's something that we've seen, literally hundreds of times. So am I worried about these calls right now? No, not at all. I'm for sure gonna at least get neutral on these calls. Okay. Um, yeah, I'm not too worried about that aspect. We should at least get neutral on the calls, which again, that's gonna be a win. Even if it's not the win we wanted or the win we originally would have had. Um, but pulling zero on a contract, um, to actually play the potential out is still a very big win. Now I want to look at the HIG. HIG has pulled down quite a bit. So it's pulled down to 97.53. So the market really doesn't like the news that, we basically declined that deal from Iran. So the market does not like that at all. This did pull down to the 79.51, so it is seeing a little bit of buying, which again, that's kind of what we're looking for our handle here. We're looking for that little bit of buying, push upward, to give us our upside, to create that right shoulder, to create the handle on this cup, to again, give us some of that bearish liquidity. And what that really means is that bears want opportunities to load puts as well. Um, a lot of good bears aren't going to sit here and buy puts into that. Okay, they might have bought puts at this 20 mo. They might have tried to wait for puts like we did. Um, but a lot of these current puts are dealer selling. Okay. Um, which dealer selling puts usually means that we're going to be getting some upside. The reason why dealers want to make money on those puts, they want to invalidate some of those puts. They want to shake some of these puts out. Okay. That should give us the machine buying back up to that 20 mile range. And from that 20 mile, that would be our exit. So we are looking for that. Now on semiconductors, um, at this point we're looking for a Bible. I don't know what else to say about this other than semiconductors need some Jesus. Um, but everything else looks fine. What about QQQ? QQQ slowly having that upside buying as well. Starting to form a little bit of bullish structure, which is, that's ideally what we're looking for here. We're looking for that little bit of bullish structure to give us enough power to push up to that level. Oh, my apologies. I might have said 639. Um, yeah, I still have those calls. So one thing when you're watching me trade, I mark all my entries. I mark all my exits. So unless I've marked that exit, I have not exited those positions. Okay. That means that I bought calls at this range and I have bought calls at that range. I have not exited yet. We're being very, very patient for our 20 mile level. And from that 20 mile level, that is when we will exit. Not sooner, not later. Now, we do need to set the conditional order down a little bit because again, our 20 mile has been pulling down. So I'm going to set this to 737.87. Okay. I just want to make sure at this point that we're clearing some form of profit. And by profit, that might mean, basically zeroing out on the contracts. But for most traders, they cannot do that. Most traders cannot trade to $0 within the day, basically. Um, or a neutral day. So we will be looking for that neutral exit regardless. Um, and QQQ, let's set our level. So the middle Bollinger is currently at the 705.52. We have our order set to 706.03. I want to set this to 705.37. Okay, and that's what we're going to be looking for. So SPY, very, very likely going to give us our upside here. Um, again, I really don't see this level not hitting. It makes sense from a machine positioning, you know, as a dealer, you'd want to see a little bit of upside, because dealers are here to provide liquidity, meaning that if we're seeing all this downside, a lot of this is just retail traders, maybe smaller institutions, firms, whatever, buying into this. Okay, and what they are buying into is just opening basically naked puts. Well, what does that mean? That means that the dealers have to sell those naked puts. They have to sell those well, covered puts into the market. Well, you usually don't sell those puts to continue seeing the market travel down against them. Now you can still sell puts and make money while the market's heading down. Um, but dealers ideally they want to shake people out of some of those puts they sold. Okay. So when we have a whole ton of downside gamma, whole ton of downside delta, the dealer wants to offset that a little bit. So that's why I'm saying from a bearish perspective, we should absolutely be seeing a little bit of upside here before prior downside. That's kind of what I was looking for before we got that bad news. And our exits are coming up here. And again, we're going to exit at those levels and not be greedy. I have a couple runners that I will try to run up to the upper Bollinger, but I'm pretty much selling like almost every single position besides two of them. So, um, really, really, really use that 20 mile for the exit and, you know, wait for the next trade. Now, in another about 5 minutes here, I will need to go. So hopefully I can will the market quick enough to give us our exits so that we can exit on end the stream on a good note. But if there are any final questions, right now is a super, super good time. Um, but let me go plug my phone in 1 second. Okay, I am back. Phone is plugged in. Um, but that also means I can't watch it. So our levels need to hit without me having to adjust it. Seeing this upside buying, again, our exit was at and I want to delete the text on here because this isn't correct anymore. Okay, so those were our entries. That's what we're looking for the exit. SPY, same situation. Now for the VVIX, it is at 92 29, well 92.31, excuse me. So I am looking for this 20 ma to reject to the downside slightly, to give us that upside reprieve to where we can exit those calls. The target for the SOX's puts, that's a tough one. At this point, positions are kind of just a hedge to my SOX's calls. And those SOX's calls, unfortunately, are from last week, so it wasn't a position we picked up today. Um, but I am looking for this to pull back under the $8 strike, or the $9 strike. Um, Stocks has just been absolutely selling downward massively today, though. But we're potentially seeing a little bit of a double bottom, so that can lead to some of that upside buying that overall we are expecting. All right, everybody, I have about 2 more minutes until I gotta go. So it doesn't look like we're gonna hit our target for that. But just remember, as the 20 MA continues to pull downward, make sure you pull your price down accordingly. The whole goal is to exit the call and at least pull it to neutral, um, ideally, or have the smallest loss as possible. Calls earlier were going super, super well until we had that news drop with the deal out of Iran being rejected. Um, Unfortunately, it had to reject literally right as we got to our exit, which means that we missed that exit very slightly. Not a lot we can do about that, other than continue trading the technicals as they come. So pushing into the lower Bollinger, that's when we take calls to the upside, looking for the 20 mile exit. Same thing with QQQ here, but we do have a lot of downside on the day. Again, we do have this very large inverse cup, pretty much entirely formed. Now, ideally, I would like to see this formed all the way to the 734.80. So if we can get the liquidity to head to that 20 mile and pull downward, that would be very, very ideal. Yep, the calls are going to be down until we hit that 20 mile range. There's absolutely nothing we could do about that. But from a liquidity standpoint, there's a lot of reasons to pull back up to to the 20 mile and build some liquidity before, continuing downward further. Um, but unfortunately, I can't control the news. Right here really nailed us with that Iran news, um, which is unfortunate. But it's part of the environment we're trading in right now, and we just have to understand that even with really good entries, we can still get kind of, screwed out of our exits. But anyone, or excuse me, but anyway, um, thank you everybody for watching today's stream. I am sorry about that first exit again. I wish that we got that news literally like 10 seconds later, and we would have had our exit just perfect. So that's really, really unfortunate. I'm really kind of bummed about that because that would have been a super, super solid trade. Um, but the news got us. Nothing we could do. Um, the only thing we could have done is targeted even further below the 20 mile, which we were attempting to do regardless. Someone had their order set literally at the level and it didn't fill. So it's just unfortunate, but we still have to trade the technicals as they come. So anyway, everyone, I'm going to stop rambling. I do have my video that I posted last night going over kind of the expectations for the week. So if you do want to listen to some more ASMR for 30 minutes, then you can hit up that video. Um, I am expecting us to pull down quite a bit this week. Basically over the next two weeks, we should be pulling down towards this 20 mile on the daily time frame, which again, that's at the 725.19 currently. So a whole $11 downside from where we're currently at. But thank you everybody. Thank you for watching. I still feel terrible about that first call exit. Um, it's just a bummer, but really not a lot I could have done in that situation. So I do apologize for that, but let's make tomorrow a better day. I will be streaming again tomorrow at 9:15 a.m. So I look forward to seeing you all there. And I hope we get our call exit and have a great day, everybody.